I'm Bob Weir, and with me today is Michael Newbury, CEO of Strike Minerals. Strike Minerals is a junior mining exploration and development company with 2 gold projects in north central Ontario. The flagship is the formerly producing Edwards Gold Mine. Michael, it may be very interesting for you to know that of all the companies that we cover, Strike Minerals is the #1 company that our subscribers download from our website. And also, the video that we did about a year ago on Strike Minerals is by far the one with the biggest views, almost 2,500 views, and you can see that either on our website or on InvestmentPitch.com. Michael, the Edwards Gold Mine, when did that start?
Well, the original mine itself goes back to the mid-1920s. There was a shaft put down about 300 feet. It's still there today. The mine closed, as a lot did, in the 30s. Mm-hmm. And then it was put back in production in 1998-99 and closed again in 2001 when the gold price went below $300.
Became uneconomic at that point?
It was uneconomic at that point. They did mine 450,000 tons, produced 140,000 ounces of gold. Average grade was around 0.39, so it was a very high 0.39 ounces. So it was a high grade operation. And then because the gold price lingered, 2001, 2002, they sold the property. And through a variety of steps and so on, Strike Minerals acquired the property and has been doing some exploration on it ever since.
Okay. What did they do to the mine after they closed it?
The understanding I have is that somebody phoned the mine at 9 o'clock in the morning and said, "Close it, please," and we expect it closed by 4 o'clock.
Wow.
And they left. I think they did remove some of the mining equipment and everything, but they did leave, as we're finding, they left zones drilled to be blasted. They left ore piles. They've left broken muck in the stopes. So it was closed down very quickly.
The mine goes down to 290 meters, and they just fill it up with water?
It filled up naturally over the intervening years. So when we took it over and started, it was completely flooded.
What attracted you to Edwards?
Well, I guess it wasn't so much Edwards as the guys who were running the company needed somebody to help them out, and in a weak moment I said yes. But I think the thing was that the fact that the intervening years, considerable work had been done to identify a number of new zones. And when you look at the old zones and you go, "Oh, these are new," it offered considerable potential.
And what were the challenges when you bought into this situation?
Well, the biggest challenge was, first, there was no resource, and the company had no money. And so we did manage to raise a bit of money. We started doing some more drilling. The object was to try and see if we could drill to create a resource. It then turned out that as a Northern Ontario, Northern Quebec quartz vein nugget gold mine or deposit, we weren't going to be it wasn't going to be easy to get a resource, and so we had to change. We step back and look at our plan and change our approach.
How much of the mine have you dewatered at this point?
We're down below 120, 130 meters at this point in time. Obviously the water goes all the way to the bottom, 290. Now that we're dewatered below the 120 level, we have actually started drifting on both the 60 and the 90 meter level, and on 60 we've cut a couple of the new veins, and we're actually following them.
How costly is it to do this dewatering?
A lot more than I thought. We think it'll cost probably $1 million to $1.5 million to actually complete the dewatering and some of the refurbishment that's necessary. We will continue the dewatering, but we can go a little slower as we're doing the underground development.
most mines eventually get an NI 43-101 resource estimate. What are you guys going to do?
We may get one, but that will probably be only once we've actually drifted into the mineral zones and done some underground work on them. The nugget effect, identifying the tonnage is not too difficult because the quartz zones that we've cut with our drilling, we know how extensive they are. The issue is that it's a very difficult nugget gold occurrence where a drill hole can have an ounce over 4 or 5 feet. 6 inches away we get nothing. And so we think by opening up and getting some mining on the zones, we'll get a much better indication of what the grade is. And of course we have the historical grade, which was 0.39 ounces.
You have your own guesstimate at this point of how much there is there.
We think the potential in the property is for about a million tons with 300,000 ounces. There are some other properties around that we're looking at to see if we can combine them in as well.
And is there more to discover from this particular mine?
There's certainly the indication from the old records that there is a lot more at depth. Drilling 1,000 feet from surface just isn't possible. Well, it's possible, but it doesn't give us very good answers. So once we get dewatered, we'll be able to do some deeper drilling from the bottom. And we also have several drill results on the property that have not yet been followed up on, so we have to do some work on those.
Okay, so if there is 300,000 ounces, what kind of mine of life would that entail? Like how many tons are you going to be able to process?
I think since we don't have our own mill and we're at the mercy of creating a milling contract with one of the other mills in the area, I think, and also because it is a narrow mine, we probably are looking at maybe 200 tons a day as a reasonable operation. 35,000 ounces a year. It's a 10-year mine life.
Are you going to be in production this year?
We're going to be producing some material this year. We're underground developing on the zones right now, and we are looking at a plan that puts us into production of maybe 75 to 100 tons a day by the end of the year.
And will there be actual commercial sales?
We're going to be selling some gold. Whatever we produce, we're going to sell. But I think it's going to take some time to get complete development in the mine so that it is a sustainable operation.
To bring a mine into production is quite costly. Now you've just raised $3.5 million of debt. Is this going to cover the immediate costs?
The $3.5 million debt we've done. We're just closing a $2 million private placement as well. We think that will be adequate to get the mine into at least start production. It always seems to cost a lot more, but it depends on the amount of development that we have to do.
So now to recap, Strike is currently working at both the 60 meter and the 90 meter level, and then later this year they hope to get to the 120 meter level. The company does expect to sell some gold this year, and then they'll be ramping up production throughout 2013. They're also going to be assessing the discovery of 6 new zones in an attempt to extend the resources. And in fact, the drift that's going on currently on the 60 and 90 meter levels hopefully will cross-cut into these new zones, and in that way they'll be able to extend the resources. We have a speculative buy rating on the shares of Strike Minerals. We have a target price of 35 to 40 cents. We think that at the current price, the shares are very compelling. Michael, is there any last word that you would like to say?
Well, Strike is a bit of a unique situation in that we're going ahead with the development. You don't often see small mines that have coming back to life in the way in which we're doing it. And from a corporate viewpoint, it's a tremendous challenge that we'd like to see ourselves in production so we can call ourselves an actual mining company.
Right. Thank you.